Good morning, good afternoon, good evening. It's Timmy here. And we're looking over the week ending March 31, the end of the month and the end of the quarter, and it all happens on Friday. Going to be a lot that I'm going to go over. I'll try and not waste anybody's time, but I'll start out with the where we came from, what we've got working with, and what the data is showing us on the SPX, and then I'll move over onto the charts, eventually ending off with the NASDAQ and some of the components of the NASDAQ that we're paying attention to. So, one-on-one calls every weekend. This isn't a one-time thing that I sent out a week ago. Had a chance to speak with two first-timers, and absolutely fantastic. The ability for me to get to know who you are not only gives me a better understanding when I'm going to answer a question for you, but it also helps me to understand what you're working with and what you're looking to work towards, so that rather than just following along what's going on in the regular chat rooms, when you send me a private message or when I know that you're watching something specifically, when I see it, I can actually go and send a message over to you. So I really appreciate you guys taking the time to do those calls. I greatly appreciate it. And all of you guys that have been with me for years, you know how that works, man. So anyway, going back to a week ago Friday when it was quad witching week and the NASDAQ was up 8.81% that week going into Friday. Thought that that was about as drunk as it was going to get, and we obviously didn't see that. However, the reason I'm back on this email is I'm coming in to show that the trade of the week that we had for that week, which was the March 17th, buy the 3850 puts, sell the 3855 puts. We were obviously looking for a close above 3855. They were $2 and $3 at the early part of the week. So you're looking at a return there of anywhere from 67% to 150%. Now, on that Friday, right, scrolling down, sorry if I'm burning your eyeballs, but I had already thrown in what I wanted for the March 24th trade of the week. And I was looking at the 40-55 call, 40-55 call buy, sell the 40-50 calls, looking for a close to be below 40-50 as we went into this previous Friday. They were $1.30, like to see about $1.50, blah, blah, blah. More aggressive and almost as confident, the 40-25, 40-20s, those were at $1.90 going into last week Friday. Threw out another one on Friday for a March 24th trade of the week edition, and that being the March 24 QQQ 315 calls, selling the 314 calls, looking for a close below 314. They were at the time on a week ago Friday, they were at 33 cents. Covered this in the email on Friday and Thursday because we got that FOMC spike that we were expecting to get, and blah, 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 going through, come back down into the trade of the week portion, and all of them filled full credit end of the week. 225 was the best you were going to get on those 40-55, 40-50s on FOMC day. The 40-25, 40-20s got as much as 3. The 315, 314 calls, 48 was the best that I saw. Somebody told me they got up to 52. I don't remember it because I remember we had that spike there as we had that fake out on Thursday that shook a lot of people out. But last week, I was private messaging people prior to the FOMC meeting that I know are very large traders. And what I was telling them about was the JP COLLAR short leg, which is at 40.65. So this was looking at 10 days prior to expiration as we were going into the FOMC meeting that Wednesday, buying the 40.70 calls for this week Friday, selling the 40.65 calls, and they were getting you close to 50% return, right around $1.65. I did not have the ability to track these during the FOMC meeting on Wednesday because I have some other responsibilities that I need to do. We had a great day on FOMC day. Everybody remembers that. However, I was told that these did spike to around $2 for a few minutes on FOMC day. So I sent out what's starting to become a revenge trade and a hatred trade, and that's about this QQQ. I've even gone and named 308 the Toyota Corolla, 1989 Toyota Corolla at that credit spread. The 315, 314s, 48 cents was the best entry on FOMC day, as I was told. 92% return, full credit, had to be closed out, obviously, for a penny on Friday. So now what I'm looking at with being a very aggressive point of view into the QQQ, and I'll cover this as we go in later in the video, buying the 309 calls, selling the 308 calls. In other words, looking for a close below 308 as we go into the end of the week, which is the end of the month, which is the end of the quarter, which is the most significant as to why. And I pointed this out here. You need to be considerate of this, and I'll show you what it looks like on the chart, that this is the end of the quarter rebalancing. And funds got into QQQ names at the end of the quarter in December when we had that stalled out rally over there on the Santa rally that was due to start. These stocks, which we'll go over, which everybody obviously knows, are up well over 100% this quarter. So therefore, there is a lot to definitely be considered about of the QQQ and the price stability that we have at the moment, which should begin to falter off as we go into the end of this week, beginning portion, latter portion of next week. So bring you over here onto the spreads first and foremost. Trade of the week, only putting there the 40-55, 40-50 being it was the main mention, 67% full credit. Everything's been rolling well, but I want to highlight here mainly where you're looking here at how we're having minus 1% days, plus 1% days, minus 1%, plus 1%. Every day we're moving plus or minus 1%, and it's a lot of volatility that's out there, and that works. That works really well. Come over here onto our main SPX, my main tracking system. Close green on Friday, close green on Thursday. Guess what, boys and girls? Closing red on Monday. I'll give you two reasons why we're closing red on Monday. First of all, we closed green 2 days in a row. We've covered this on numerous occasions of how you do not close green 3 days in a row. It is a rare event. I will move my logo here on some notes that I had. You had 3 in a row off the November low. You had 3 in a row the week after the 2022 bottom in October. You had 4 in a row in September when we went from 38.87 to 41.20, and then CPI report came out and we dropped down into that October low, excuse me. We had 3 in a row once in August. We had it twice in July. We had 4 in a row the week of July 4. And we had 3 in a row 2 times in May when we hit that 43.08 double top and right after we closed below that bear market line at 38.55. So again, with the data, we have had 3 in a row this month. We had 3 in a row back in March. On the Thursday, March 2, on the Friday, March 3, and then when we posted the highs of the month, 40.78, we did close green, plus 3 points. That helps you a little bit with your calculations as to whether or not you want to get into a spread as to how high that third day was a close. 2 in a row, 2 in a row red, 2 in a row. Back here at the end of January into the beginning of February, where again, we posted that high of the month, which is currently the high of the year, 41.95, 3 in a row, bang, bang, bang. 41.95 came the day after the FOMC meeting, which was on February 1st. So again, something to consider. Two in a row, four in a row back in January when this entire rally began, which was all fueled over there by the NASDAQ. So, again, things to be considered about with the structure of how many in a row. Now, more importantly, what I'd like to show, and I'm not getting my cursor, is just making sure, all right, we closed green, plus 53 points. The week ago, we closed green, plus 81 points. The week prior to that, when we posted the highs of the month, we closed red, 193 points. Now, my main focus here is how we've closed green 2 weeks in a row. This was 2 weeks in a row we've closed green. Back here in the beginning of March, we closed green for that week, the first week of March. Or the first week of March, March 3. Closed green, plus 53 points. We closed green 2 weeks in a row over here at the first week of February, last week of January. We closed green 2 weeks in a row, the first week of January, the second week of January. We had 2 green weeks in a row back here the end of November during Thanksgiving and over here in the first week of December. We had 1 red, 1, 2. We had 2 green weeks in a row after we had posted that low of the year over there in 2022. 2 green weeks in a row. Come back to September, August, all of that. It wasn't a very good thing that we were having. We had here 4 green weeks in a row coming off of the July lows, which everybody remembers the big buy divergence that we had off of the June and then off of that July dip. So coming into here that we've got 2 green weeks in a row, there is a very strong data advantage that we are going to be looking at a red week as we approach the beginning of this week. We are still inside of that full moon window, which doesn't necessarily focus on us having a ultimate bottom, but it very strongly hints towards it, and therefore definitely still looking for that lower low, because now moving over here to this last column on the monthly range, we've ranged 269 points for this month of March. We were only 252 points for the month of February. We were 299 points for the month of January. So we're still below 300 on all of these. But again, that move down that we were looking for from that 41.95 back over here in February, we were looking for 37.95 to get a 300. We only got 38.08. So move over here onto the charts, and I'm going to start out with our detailed SPX, the detailed SPX, and how this move right here on this dip down from the FOMC, we came just fractionally below that 50 retracement from that move, right down there to 39.24. So take that out of the way. We broke down below the 200-day moving average. On Friday, we had that grind upward back to both the 100-day moving average and your March open, 39.63.34. I'll cover that in a little bit when we go back over the charts. So again, from here, from where we are, very few people are really looking at this from what it was, where you have your FOMC spike, your low, on that sell-off, your bounce, your lower low. Then you had your gap down, another lower low, low of the week on Friday morning, and then just flagging off here into the dust for how we were going to go and end the week, which was right here at our gap bottom from when we gapped up on Tuesday night. So nothing significant that really took place there on Friday that's giving any indications as to where we're moving as far as going forward. However, you've got the Russell 2000 over here with the IWM. And this is, as I was saying there on Friday, flashing a very big warning sign. And looking at this from a large point of view, as you can see here, you're at the 30 retracement. You are at the 50 retracement, going to COVID right here at 170. You're right at the 2020 open right here at 166.64, and bring you down here as to what we're looking at now, which this was a fake print, which I hadn't removed here yet. This is what you're looking at from the middle of March. I'll even move out here and customize it so we can see where the FOMC was, so that you can get a better view and better understanding of it. Is an hour going to fit? It is. 199 was where we topped out on FOMC day back on February 2nd. And here was where we fell apart. March 6th, when the banks started collapsing. SIVB was on March 9th. Then you had Credit Suisse over the weekend. And again, how we have come over here, down below this 170, pressuring onto that 166. There's a lot to be worried about if you're over here talking about the Russell. But this is now going into the end of the month. You're going to get a recovery over here on the Russell, looking at this from a much wider point of view. You're going to get a recovery where you're going to come out of this May to now area where you're down on the bottoms. Let me just bring you in and show you something very similar. Here is your NDX, and here is your May. So the Russell is down at the bottom. The NDX is up at the top. So where do you believe that you are going to get your rotation coming out of? It is going to come out of the NASDAQ, assuming you do get that rotation. Here are your Dow Jones transports, and your Dow Jones transports are, again, flashing some big warning signs coming down here where would be right around SPX 3764. Still a very strong momentum to the downside on the Dow transports. 38.2 over here to the COVID lows. Again, pressuring that move down here below 13,000, 13,500. Something to be very concerned about as how it makes an impact on the SPX. SPX wide view, again, where we're at and where we've come from. And again, you can just see over here how you've got this big major support area and you've got this big major resistance area. So going to make it pretty clear and go back to May 1st and go here and do it on a 4-hour chart if that fits. I don't think it will, so we'll do 12 hours. And this is what you've been doing since May. Since May, we're coming up here to around 4,100, and then we're selling off and we're going down here to 3,800, 3,700. 3,750 more or less, and then we're bouncing back off 3,700, and we're going back up to 4,000, 4,100. We've been doing this now for 8 months. For 8 months. You know, and you've got all of this discussion out there about, oh, the bullish blow off top and, oh, the bearish market collapse. We have gone absolutely fucking nowhere for months. It makes great for trading, but we're not going anywhere. So all of this discussion about what's taking place in these recessions and all of this other crap, it's a bunch of fucking bullshit and it has nothing to do. In gray, I have your OPEXs. These are your OPEX weeks. And if you remember going back a few weeks ago, I said this is really starting to look a lot like September. It's obviously changed that because of this move up that we've got. However, this move that we've gotten up here so far is nothing but a rising wedge. And that rising wedge got its throw over on the FOMC and then puked off. So now it's very questionable as to whether or not we are going to see that harder move that I'm looking for much further down into that low 3,800, upper 3,700 area as we go into the end of the month, beginning of April, or if we're just going to flatten ourselves around where they're not going to rotate into the Russell, they're not going to rotate into the Dow, and they're going to hold the NASDAQ right there flat right around 300. Very questionable, but we will see because, again, coming back to where we are with our data, having closed green 2 weeks in a row, having closed green 2 days in a row, we should begin the week off on a step to the downside. How we are able to recover a step to the downside back below this 39.44 area is very questionable. So we will see. 39.44 being the retracement from the March highs. Should we get down below the 39.44, which is roughly right around where our 200-day moving average is, and we are getting a close below the 200-day moving average down towards that low that we had there on FOMC day at 39.09, or sorry, on Friday, 39.09, but below that 39.36 area, the pressure is going to build for a little bit more downside, which does fit in with our view that we are looking for 38.08, retest, something lower down into that upper 3,700, very possible, but I see too many lines all joining up together here at 38.05, 38.10. I do not believe that anything below 38.10 will be for real, and that will be my area where I would like to be able to get into a long as we go into the end of April, which is coming on to the beginning of earnings season towards that last week of April. So I'll leave you with the NASDAQ here as we go into a couple of charts really quick, and how the NASDAQ has basically been taking advantage of a lot of activity over the last couple of weeks, and at the same time looking at this from the same point of view, going back to May of last year. And again, you can see here is your beginning of May and your spike up here on May 4th, how we've been trolling right below that 13,000 level. We are right here again. We were over here in September. We were over here back in June. Had that run up here in August, and everybody's believing that this does look like a cup handle, inverted head and shoulders, and is going to be moving up to the upside. I behoove everybody that believes that. And again, here's your, public service announcement.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
So looking at it from that point of view alone, yeah, sure, you could see that. And come over here and bring you on to a big charts. What I'm looking here is the RSI, and seeing how we've had a running sell divergence on the RSI basically since the beginning of February. How we're getting a lower high over on the RSI, but your price is confirming and going higher. It's just getting worse, and this is looking at a 12-hour. Come over onto a 4-hour, and you've had that sell divergence that's been in place, looking for a move since the middle of last week, back when we had the FOMC. You're getting a little bit fractionally of a higher high move over there in the middle of the week. You're getting a lower RSI. And come over onto the daily, and your daily is just absolutely fucking pathetic. It's pathetic. So how this has not rolled over, how we have not been able to produce a sell over on the NASDAQ, has started to become a little bit angry, and it's starting to make a couple of people pissed off, and I'm one of them. So I come over here and I bring you onto the QQQ, and I'm looking strictly at a daily, and where I have a line over here is a line at 304. And again, you were right up here, overbought, pending sell divergence, but true strength indicator, very strong, almost a 5-point gap on that, not as big as it was as we went into the highs in August. But like I said 2 weeks ago, when we were looking for that rally to go up, There is no way that they are going to waste a bullish crossover on the 50 and 200, but they took it a little bit too far, because getting up above that 300 and then really getting up above that 304, this is starting to become a little bit of bullshit. So where it's at is NVIDIA, and again, coming off of 100, up to 187, down to 138, all the way up here to 275. You don't need to be a mathematician or a rocket scientist to see it. You got a 1, 2, 3, or you got a big ABC. That depends on where the dip comes. Your daily, extremely overbought, up there above 90 at the early portion of last week. Everything on this is still strong, but again, this is up from 108 to 275 from October, coming off of December from 130 to 275. So if you're a hedge fund and your job is to make money for your clients, when you got into this in December, and now here you are, from 138 up to 275, are you still holding this position for your clients, or are you booking your profits and moving on to something else? Now, NVIDIA Weekly, again, not really going to go on a weekly and start talking about sell divergences, because you are talking about weeks. You're not talking about days. But as you can see here, as your weeklies got overbought, then you had your dips. Your weekly got overbought going back into 2021. Then you had your dip. Weekly got overbought at the all-time high, and very obviously what took place after the all-time highs. So again, over here on the NVIDIA Weekly, should be looking at a retracement down to around 250. Microsoft, big weight. Not as spectacular as everybody else, but again, same thing. You're coming off of this 218 bottom, very big bottom that everybody knows about when you're below 230, and up here above 265, back over onto your old supports at 276, 272 over here. So again, another one of these ones that are questionable, seeing as how overbought you are on the daily, as to the advantage and possibility of having a pullback to around that 265 area, which would have the impact on the QQQ. Look at the Microsoft Weekly. Again, nothing to really go back on, because you're going back to 2021 when we were in a very bullish market. Overbought on the weekly, got your dip. Overbought on the weekly, sell divergence, got your dip. Overbought on the weekly as we went into the all-time highs. Very clear what took place. And here we are again, overbought, as we were over here back in February, and you got your dip down to 246. So again, very possible to get a drawback down to around 265. Apple, 123 beginning of the year, 162 this week, and this is Apple. So once again, one of these ones that very strongly has the plausibility of getting that roll off over the course of the next 2 weeks. However it takes place, from a headline or some economic news event that hits everything, looking for that drawback to around 151, most likely around 157. 151, a 10-point drop would obviously have very strong implications over there on the QQQ. Over here on the weekly, again, same thing. Overbought, sell down. Overbought over here in August, sell down. Overbought over here in February, little bit of a dip from that 157. So again, being that we are fractionally overbought over here on the weekly, very strong possibility of that move back down into that 150, possibly the high 140 areas. And then you come over onto Google. Google number 4 as far as weight goes. Google hanging over here above 100, right above these May, June, July lows before that August pop down to the sell-off. Right over here at that 104 top, 105 top back here in October before the big sell-off. Right over the 102.25 from back in December before another big sell-off. Red 108.18 on earnings, big sell-off. Here we are, hanging above this 105. So again, a retracement 5% down to around that 100 level. possibly even down to around 98, the impact and implications that it would have on the QQQ. Over here on the daily, very clear, pending little fractional cell divergence, possibly move to the downside to begin that little bit of a rollover, test the 200-day moving average with the 50-day moving average well below the 200-day. And again, come back over here onto the weekly, and you see where your weekly is, which is a very aggressive 50-week with the 200-week creeping up, fractionally getting over to that overbought area at 70. Same thing took place over here in February, a little bit higher, got your sell down, 30 points. So again, coming into where we are, having gone through what we've been through, where we are, what we're looking at for the month, and you know what? I'm going to go back to the bread and butter over here with the SPX and pull up your full moons and zoom you out to where we're at. I still like this 4078 being the full moon top. I have to give respect to the 3808 because it was within 4 trading sessions, although that is a bit of a stretch. You come through and you look around where everybody is at as far as their full moons, and I do remember now, I looked it up earlier. It was the 2022. I missed one. I did miss one. I made a mistake. I did make a mistake. I missed one. And the one that I missed was the January 2023. It took place here on January 6th of 2023. I missed this. So that way, this needs to be duplicated, and it needs to go right there on January 6th. We had our low right over here on January 30th. Sorry, on December 22, we had our low, and we hung around right here. Fractionally lows, fractionally lows, fractionally lows. December 6th or January 6th, we did have a full moon, and I forgot to put that onto this chart. But once again, coming on, zooming out, you can see your full moon implications and how they work out. This one here was one day before we had that FOMC meeting. We got our spike, and then we got our sell-off. All of them have worked out very well for major tops and major bottoms. I'm still giving the benefit of the doubt to this 3808. But because of where we're at with 2 green weeks, with 2 green days, with the monthly count, most importantly, on how we have been so fractionally not being able to get to 300 points, I still give a very good chance, a little bit better than 50%, that we are due to break that 3808 and likely test something fractionally below 3808 before we can get a proper oversold reading on our SPX, on our 4-hour, and be able to aggressively start looking for a move upward as we go into April. So I'll leave you guys at that. I don't really have too much other to ramble on about other than it is hot as fucking hell over here. I hope that you guys are not praying for the hot weather because I know you guys have a cold winter. But let me tell you, the heat index today was 108 degrees. I have not been as hot as I was today. I can't even recall in all the years that I've been over here. So, you know, keep dressing warm if you have to, but I'm telling you, those days are coming. You're not far off from them, and you're going to be saying, fuck this, I'm going to sit in the air conditioning. And that's exactly what I'm about to go do after this, is go lay down in the air conditioning. So have a great Sunday, have a great Monday, evening, morning, afternoon, whatever time you're watching this. If you're not a member, sorry,